This is Carol Harnett with a one-take Work.Love.Play.Daily video blog, and we continue to discuss the ramifications or follow-up from a HR benefits column that I have uploaded right now called Selling the Problem of Absence. Interestingly enough, I'm writing today my next column, but I'm still addressing these issues in and around absence and disability because I've had so many generous comments and requests to continue this monologue, which I hope at some point turns to a dialogue. So the thing I was asked to talk about today was more specificity around duration and incidence and what you can expect with the various products. So let me start with the traditional products first around disability that most people understand the best, and that includes short-term disability and long-term disability. And then we'll backtrack into FML, family medical leave, and incidental absence. Short-term disability, for those who are watching and aren't immersed in the field, is meant to be a short-term product which insures people for their salary from the time they go out of work, minus an elimination period or a waiting period, until the end of benefits. So usually a waiting period, meaning that you would have to either go without salary or tap into sick time or paid time off or vacation time. A traditional waiting period is about 8 days. It can also be 15 days. It can also be 30 days. But I would say a good number of policies, more than half, are either 8 or 15 days. And then the benefit itself, once you become eligible and begin payment, runs for usually either 13 or 26 weeks. It's the two primary plans. There are year-long plans, certainly, but the majority are between 13 and 26 weeks. Average duration. Now, there was an initiative started, a number of years ago, actually somewhere around 2000, by the National Business Group on Health. At that time, they were still called the Washington Business Group on Health. It was ultimately called MPAC, Employer Measures of Productivity, Absence, and Quality. And that initiative was designed to develop standard definitions around what you call things and how you measure them. And so for the discussion around disability duration, the measurement is supposed to take place from the date the benefits begin until the date the last payment is made. That doesn't mean, by the way, the person returns to work that day. And there, historically, as I've talked about in other posts, about 14, 15 years ago, the median and the mean, so the average duration, was really very solidly at 42 days. It has drifted up over time, and in the article itself, the column itself, I report the numbers from Gen Re, which are now stating that average duration, given plan design and all the caveats, ranges between 50 and 62 days. So quite a migration. I'd say that's a couple of things. We are less healthy as a nation, certainly, and there are many more comorbidities as a result. Comorbidities, let me say that again, one take. And so you're definitely beginning to see the upward drift. Now, some people have asked, is that due to the aging of America? And there was work I was lucky enough to be involved with that looked at the issue of aging. And what we found in that study, which was done now at this point about 3 years ago, was that when you look at the number of people we insure who are over age 45, and they're a huge number, right, because they're the biggest part of our population, but then you look at the numerator, the number of people who actually file claims, what we're seeing is that either that percent claims that are coming from that population, so not the pure total, but the percentage versus people who are insured is either remaining the same or 3 years ago was decreasing. So they were filing the same or fewer claims, but there was a slight gender difference, meaning that women were filing the same number of claims after age 45, and their duration was about the same as when they were younger than 45. Men are filing about the same number of claims, but their durations are longer. Two theories around that. Women seek preventive care more often. Some people say men are wimps. I'm just repeating what somebody said. I actually think it's just that women tend to seek preventive care earlier and more often. So that may be one of the reasons why. Under age 45, we're actually seeing, obviously, the denominator, fewer people are insured in that group right now, although the echo boomers are starting to come in, so we're going to start to see that base go up. But they are historically filing more claims than the people who are over 45 now are filed at a younger age. So what does that mean? They are sicker. They actually are getting chronic illnesses much earlier. About 6-7 years ago, people between the ages of 30 and 39 saw a 70% increase in their diabetes rates. So we know that this younger population is definitely less healthy, and we are continuing to see that even at younger and younger ages. So that's another reason why probably average duration is up. The second product, long-term disability, usually picks up. It is a separate policy, but usually picks up when where short-term disability leaves off. So its waiting period is either 13 or 26 weeks, so the end of the short-term disability benefit, and then it technically runs as long as you continue to meet the definition of disability. And what that means is that for the first 2 years traditionally, but it can be 1 year, you are still under the same definition of disability, which means that you are disabled for your own occupation, not your own job as you perform it at your employer, but your own occupation. And then usually at the 2-year mark, again, can be a different time, can be as short as a year sometimes, there's what's called the any occupation definition, so that you are now disabled for any and all reasonable occupations, so less restrictive than Social Security disability, which is that you're disabled for all occupations, including those that we might argue are not reasonable given a person's education level in particular, or their skill set or prior jobs. So what we know there is that there's a bulk of claims that really ends relatively shortly after people pass into long-term disability, and that tends to run about 2.5 months. And if we look at the whole block of people who are out on long-term disability, it's about 2.5 years. So right coincident around that any occupation definition. That's what you can expect. Now, there's another phenomenon in disability that's not often talked about by the carriers and the third-party administrators, but that is that very logically, and by no means of deception at all, carriers and third-party administrators, 15 years ago, started to say that if you integrated short-term and long-term disability to one carrier or one third-party administrator, that in theory, because you had the short-term disability coverage and were managing it early, you would have a positive impact on long-term disability. That phenomenon does not hold up, despite years and years of analysis by everybody who works in the industry. So what does that mean? That means if you have your short and long-term disability with the same carrier or the same third-party administrator, that the long-term disability will have a higher incidence than it will if you have the short-term disability carrier with short-term disability coverage with one carrier and the long-term with another, or if you self-administer the short-term disability or the salary con and you put the long-term with another, or if the person just has only long-term coverage. And there's been a number of reasons or theories put out about that. Some people say it's a starvation factor if you have long-term disability only, and there's probably truth to that. Others say because in the short-term disability, it's in an own occupation definition, and then you move to the first 2 years of long-term disability, and it's the same definition. It's hard to deny an LTD claim that might be borderline questionable because you've already approved the person under the same definition. Now, some carriers, like Standard, and others, I guess all are capable of doing it, are offering a single disability product now that combines this concept of STD and LTD so that the person really has one coverage, and there are staged definitions of disability. So a period of time where it's own job, a period of time where it's own occupation, and a period of time where it's any occupation. I have not personally seen statistics yet as to whether that improves the time frame of which would traditionally line up with long-term disability. So that's a very, very, very high overview, probably more detailed than people who aren't as interested in the product or the products are interested in, but that gives you about STD, LTD. Family medical leave is an interesting product. Obviously, it can be one that is related to your own absence, or you're one that is related to the absence related to the care of a loved one that meets the definition under FML. Most, or I should say more and more employers are outsourcing that because they have too much difficulty tracking the state regulations versus the federal regulations and versus, in some cases, the city regulations as exist in the city of San Francisco. It's a product that you may want to pay more attention to. Cigna, who I had referenced in the article, has shown some real correlation between FML usage and STD usage. And in their work that I referenced in the column, they indicated that if someone files an FML claim for their own medical condition, they are 5 times more likely to file a short-term disability claim. And if you think about it, that makes a lot of tremendous sense. The interesting statistic was that if someone files an FML claim, family medical leave claim, to care for a loved one, they are 50% more likely to file their own behavioral health-related claim in some period of time. Actually, I realized that they never did tell me the period of time, but at some point that they will file their own claim. So it makes it an interesting point, particularly for leveraging warm transfers into support systems like a work-life or employee assistance program. Incidental absence programs are really in their absence. They are not as well tracked as anybody would like to see. Even the people, the carriers and the third-party administrators who are starting to be asked to take on that are not amazingly well equipped to do that, just because of the variety of reporting mechanisms and tracking mechanisms and whether someone should be calling a supervisor or calling the administrator. So that one's still up in the air, but very, very important to continue to watch how that will be tracked. So I think that's about as much as I can talk about disability statistics and metrics for at least one take. If I really need to follow up, someone I'm now learning will tell me, and I will do that. So this is Carol Harnett with a one-take Work, Love, Play Daily video blog. Oops, interruption. I forgot to say for FCC regs that I need to indicate that HR executive pays me to write the HR benefits column every 4 weeks, although they do not require me to do this blog, nor do they influence it. And Cigna, who I cited, is a client, although I was not involved in the study that I just referenced. So one more time, this is Carol Harnett with the Work, Love, Play Daily video blog, saying to you that I hope you've had some good work today, that you're going to enjoy some great love, and that you've had some tremendous time to play. Thanks.